Okay, guys, can you hear me? I would like to continue the presentation. First day of 30 days BT strategy. Do you hear me, please? Okay. Second, thank you. Can you also see the screen where I want to explain everything? Can you see here? Okay, good to go now. Exactly what I want to teach you is BTMM. So the meaning of BTMM is exactly be the market maker. So it means that what learning is exactly effective and accurate because you will learn how to trade like a market maker. You will trade like a market maker by using a simple uh, way of price action indicators that will help you exactly to identify market exactly a very easy way. So uh, let us exactly what the BTMM strategy is about and the content of what we will exactly learn in the course. So after the introduction, I would like to teach you exactly the market structure because we have to learn the market structure before we apply the tools that we have, the tools which are in BTMM strategy. So when we learn the structure of the market, second we will learn how they interact with the price action, the big units. The big units are like the banks, brokers, and also market makers. We have to learn how they interact and what they do in the market and where they are because all all that price moves from high to low, low to high. We have to know where are the banks, what are they doing, where they wanted to, do they want it to move this in upward or downward, like much up or much down, or in or downtrend as much as you know it. We have to also know the weekly structure. And the reason why we are always focusing on the weekly or daily, because we wanted to spot out, to figure out what the market makers or big units are doing. So in in a PTMM strategy, in saying market makers, brokers, and also uh, uh, like institutional lows, we call it big units. What are the big units doing? So that together we call that name. So we'll give you some glossary or words or terms that I have exactly abbreviated of all the things that you in in the strategy. So we will also focus on the daily time frame. You will also learn about the types of trades that you will take. You will know what you are doing before you place a position of buy or you have to know what you are doing. So you will learn all the trades that you will see on the chart. You will also learn the timing, and timing is one of the most important thing that exactly includes in your trading strategy. You will learn timing, and you will also learn psychology, because this market is 60% about the psychology, and if your mindset is exactly good, I'm sure you will make a huge, because your losses will be exactly reduced, or maybe more losses will be reduced, and exactly you will learn trading psychology. So you will have a psychology that you may have a confidence in yourself to take an action in the market. And I will also give you some other tips of trading that will help you in this course. And finally, one of the most important thing that everyone lacks to learn when in trading is the risk management. and money management. So risky management and money management, we know that most of us, we like to make money, and we don't like to lose what we have. We always focus on money, and when we focus on money, the opposite will be losing. When you always focus on getting, then there's a losing. So we need to have some protections of our money, the initial deposit that we have. So there must be a plan of protection of your equity or initial deposit. So you have to have a risk management before you trade. So you will also learn a risk management during this course. So in this course, I will give you some theories and also practical, or it's like what you should see on eyes and you should do in active or live. But tonight it's about introduction, and when I say the introduction, we have to get some information before we get started, because you need information before you take a step. So what is the BTMM strategy? Is BTMM strategy exactly the method that this strategy is about? It's exactly derived from a guy who was exactly made these tools in what is called the trade 5 or 10 now, and his name is Steve Mauro, and I don't think that he's alive right now, but this is strategy all the market. If you go on YouTube and search for BTMM strategy, it's not what I have created, it is what I have learned and updated, and I have added some other indicators and some other tips, because another exactly creativity that is exactly empowering or giving you more confirmation. So I got the knowledge first, then I have applied what I know in the price section, then more confirmation. I've seen Golemo is in my VIB group, and she have seen most of my signals and always gone in a profit. So I also have done it some videos from scratch. So I have started recording most of the important topics that this BTM is about, and I have uploaded that videos in my YouTube. So every time when you come up on the meeting, then go on the YouTube, search for the topic that I have you tonight. So I would like you guys to go on my YouTube channel and look for the topic that you have learned last night or tonight. So first of all, in this introduction tonight, I would like to show you the market cycle, and it is exactly how the market makers always focus on the market. So let me do this for you, and then exactly you will understand how they exactly start what is called the limitation of the order of the market. So I think I will need, if you can see this, please let me know. Okay, yeah, okay. Can you see my drawing? Oh, I hope you cannot see my drawing, but let me try to do another way. Okay, okay. What I want to show you in the introduction is what is called exactly the market structure. So this will be our first lesson tonight, and I don't really like to prolong uh, talking too much. Talking too much, it's better to show who will practice. Why do we focus uh, the market is trader? Exactly the MM, the retail traders, and tools that make it the direction is exactly correct. It means you follow a direction, then they market against your prediction. You are buying, then they reverse the market in downside, and then you think that the market will sell again. Then maybe the price hit your SL, then they again buying. This is why you need to know exactly where they are inducing the where the market makers are inducing. So I will draw exactly, but I have to tell you the information before I do this. So why are they doing this? This is then on every time frame. And how can I see? You can see on every time frame, whether you go on lower time frame or higher time frame, there is an inducement on every time frame. On that inducement, it means they always removing you from the market by exactly reversing the price action to your prediction or how you have decided to take a decision. And this is why retail traders mostly lose, or I, or every new pie traders, he or she may lose this. So the MM, I mean the market maker, will accumulate what is called a contract by ranging the price. Oh, someone is joining. By ranging the price. Yeah, uh, exactly. The reason they are doing is exactly they want to make money. You want to make money. Why are you learning? Why are you learning? Why you want to trade? You want to make money. Market makers also, they want to make money. How can they make money? They have to exactly reverse every trade, and they have to do something like in psychology, because they are exactly making money from us. They are making money how we are thinking. That is how they are making money. So we we call it this in another name, which is stop hunting. You buy, you place stop loss, then they want to hand that stop loss, and you will be out of the market, and they take all your money. So that is called the SH, or stop hunting. You have to learn that. Let me show you this structure. So let me go on weekly time frame. That will be clear. Guys, every time what is called the market makers, they start what is called, they started the price what is called ranging. The price always consolidates. The price consolidates. The price consolidates. If you can see the screen, I be very important, guys. So this is what's called the contraction phase, which you see. So this is what is the market structure as market cycle. So what? So break down, or it must break up. Let us say the price have broken up. So what do you think then? That the price is buying, right? You think that is buying. Okay, what they will do is they will reverse the price down. like almost how many pips when what do they do, like how many pips that price will go down as inducement. So first this is called the inducement. This is the inducement. So you can also call it the stop hunting. Stop hunt. This is also called the stop hunting. Price when they push the price down after it has broken the consolidation zone, then they reverse the price into down direction. What will they do next? I think we had like 15 persons listed on we have listed today, but I think they know how to join. See, 7 persons including me. So the market makers, they open the market every morning consolidation, or call it ranging. Whether you have understood what is called the contraction. Do they start the day? They start contraction. What call it the contraction? They start the price every morning. Day contraction. I'm in East Africa, so the market makers, they exactly calculate the late night. So every time the price opens a new day, they start what is called the contraction or consolidation. So after the consolidation, what are you expecting? You are expecting inducement. Do you understand, guys? Every morning or every day the price is opening, or they will open the price with contraction. We expecting the price to form what is called the inducement. So what is next after that? And so we got what we call the breakdown in the inducement. Yeah, hello. I'm recording. Maybe you will listen it. That will be okay. And I have to do this. Okay. Every day, the makers open the market in contraction. After the contraction, the price will break off the consolidation zone, and the break up or breakdown will be inducement or stop hunt. After the stop hunting, the price will exactly move down. For example, this an inducement, which is accumulation, because the price is coming down. It's forming what's called the oversold. It's selling. So entry, we get what is called the breakdown here. So actually an entry of sell, which will be an entry of sale. So you can see that the price is breaking this zone. This is a sample, but you will see on the chart, because this is what I have seen. So after that, what is happening? So what do we call this? This is called the consolidation of low. What we call the consolidation at low of, this is where we call here. This is the consolidation, because they opened the price in consolidation, then the price pushed it up and broke above the which is inducement. After the inducement, and I have explained it to you. What is inducement? Inducement is when the MM wants to remove the retail trade. They are hunting the stoppers. For example, if you sold here, for example, sold here, you thought that this market will sell because you got double top one, there is another, then you think this market will sell. What happens then? the price go up in orders which you have placed it. Time you see this color, the big, I don't know whether you can see this